If there's one radio commercial that's consistently so interesting and so cringy at the same time, it's got to be the gold commercials. So today we're going to dive into whether you should consider gold as an investment in your overall portfolio.
All right, so Spencer, over the next couple of weeks, we're going to be talking about some of the more marketed securities that you can invest in, or the more marketed things that people will say, hey, this is a great investment, you should pour your money in. That we may say, hold on just a second, this may not actually be the best for your specific situation. So today we're going to be talking about gold, precious metals, gold, yes, gold coins, gold bars, all the fun announcements and all of the fun ads that you see that say, buy your gold today. Why is it a good idea? Why is it a bad idea? Why do people even consider gold as an investment?
Gold is one of those investments that, because it is marketed so heavily, especially on the radio and in certain fields of the media, there are just a lot of strong emotions about gold. And if we know one thing about investing is, when our emotions get really high with investing and based on whether we have fear that we're trying to deal with or we're trying to capture gains or whatever it might be, when our emotions get involved, it makes investing all that more complex. When we've got people, telling us, hey, you really need to invest in gold for a variety of different reasons, we need to take a beat and really think about why is it that we're investing in gold. And so we get to talk about that some today. When we think about it, gold has been a store of value for centuries, for millennia. People have used gold as a proxy of value and been able to trade that for various goods and services, over millennia again. So we recognize that it is a store of value. There's a long history of it, but we also have to recognize that it's a store of value, but it's really the intrinsic value. Other than for maybe jewelry, you have to say, well, what does it actually do for you? What are the actual uses that you could take gold and deploy it to do something, for you, other than that gold bar, used in war or something? I don't know. There's not a whole lot to it.
Right. So as we contrast this with stocks or bonds, when you invest in a stock, you are buying ownership shares of that company. You are participating with that company's growth. If a company pays a dividend, you are receiving income from that company. With a loan, there is intrinsic value. You are lending to a company or an institution with the expectation that you will receive both your principal back over time and interest payments. And so there is an exchange of value. You are saying, I'm giving you something and you are giving me something in return. That's the big difference here with gold, is if I have a gold bar, it may look shiny in my hands, but it doesn't do anything for me.
Right. It just sits there.
It just sits there.
And actually you have to consider the cost of maintaining that gold bar, because even though it's going to be stable and if you put the gold bar on the table, it's not like it's going to walk away. There are people who could try to come and steal it. And so when we factor in the different costs of it and maintaining it, instead of it paying you a dividend or paying you interest, it's actually the opposite side. You have to pay to be able to maintain it just as it is, to protect it just as it is. Now, one of the things, if we kind of look at the big picture here, that people will often say is, well, it does a great job of helping you diversify, your set of investments, and we think that there's merit to that.
Yeah.
It is a different investment than stocks or bonds or either other types of commodities. So there is some value to the diversification because the rate of return is going to be different typically than what we see with stocks and bonds. That does not mean, however, that when the market plummets, that gold is going to do really well. When the global financial crisis happened, gold did not do very well there. It did not maintain its value. On the side of things with the COVID lockdown, it did. So it's a different return sequence, but we can't just assume, okay, it's going to hold its value when the world seems like it's falling apart.
Right.
It may not. The return sequence will probably be different than stocks or bonds, though.
Yeah. Talk us through maybe the volatility too, because I think that's something that's surprising to think about with gold, is you think, oh, it's not going to spike up and down as much as a stock or a bond, but talk us through the volatility of gold.
So historically, the volatility of gold has actually been a little bit higher than stocks. So the spot price of gold, I should say, it's a little bit higher than even the stock market. So stock market, typically you would look at volatility metrics that are a little bit less than 20% less than what we see in gold. So gold marginally, spot price is marginally more volatile than what we see in stocks and a whole lot more volatile than what we see in bonds. So, from a diversification standpoint, the sequence of returns being different is nice, but the volatility doesn't really necessarily help us to dampen down and keep our portfolio volatility really low. The differences there in terms of the correlation help some, but we still got a volatile asset.
And I think maybe if I were to back up a step and say, okay, if I buy a bar of gold for $1,000 and I just put it in my safe deposit box at my house, my fireproof safe, I may forget in 5 or 10 years what I've paid for that brick of gold.
Sure.
Because I'm not watching it. I'm not watching the spot price of gold as it's moving around. I just know I bought it and now I have it set aside. Where I think there's an emotional attachment in a lot of times, in a lot of ways, to the prices of our stocks and bonds because it's easier to see those on a day-to-day basis. And so where gold may not feel as volatile because I'm not watching the price of it, the reality is it's actually a very volatile asset.
It is, and that really comes to a head when we go to sell the gold. So it's, if we set it and forget it for 20 years, kind of like if we buy a stock and just set it and forget it for 20 years and check in, we have the Rip Van Winkle, effect of, we fall asleep, so to speak, we don't monitor it, then that actually there's a lot of benefits to that as an investor if we can not have to use those resources over time. But we do need to recognize that that there still is that level of volatility. Now, one of the things as well that people will often say, well, it's a hedge against inflation. That's why I'm investing in gold. It's a hedge against inflation. Over time, the rate of return has actually outpaced inflation. So if we go back to the early 1970s and look at rates of return in stocks, bonds, and gold, gold has kind of been in between stocks and bonds there. So the stock market giving us around a 10% rate of return, gold giving us around an 8% rate of return, and then bonds being several percentage points lower than that. But the hedge against inflation, I think we have to take this with a grain of salt. It's a commodity. And so there's only a certain amount of gold in the world. People are mining gold, but they're not adding much to the store of gold over time relative to the base that we have. So the idea is that because there's not a whole lot more being created and there's a whole lot more money being printed by the US government, that it's going to be a better hedge against inflation. That doesn't actually necessarily pan out on a year-to-year basis because gold can be down 15 or 20%, year to year. It can be up 20, 30, 40% on a year-to-year basis. So when we say it's a hedge against inflation, it does an inferior job from a volatility standpoint of delivering that hedge against inflation. Now, you might say over 6, 8, 10 years that, the rate of return does a decent job of giving inflation plus even a little bit. There. But we have to say, okay, as a hedge against inflation, there are periods where it seems like it does a really nice job. But, for instance, in the period here where we saw a spike in inflation, it didn't necessarily move in lockstep. Whereas if we have a Treasury inflation protected security that's actually tied to that cost of living adjustment or a Treasury, some kind of Treasury note that is put together in that way, then we've got a better opportunity maybe to match a low level of volatility and protect with a hedge against inflation.
So Spencer, we've kind of talked a little bit about those rates of return volatility. How do you actually own gold?
Yeah, well, and it's something that I think clients who have never owned gold or they have this as kind of this idea that maybe they would want to own some gold haven't really looked through the process oftentimes. There are a variety of ways that you can own gold. One would be that you own it within the substructure of a mutual fund or an ETF. So there are funds that they either own physical gold or they trade gold on the futures market or they own gold mining companies. Lots of different ways that you could do this within public securities. So an ETF or a mutual fund. That is one way. That relies on this idea that the public markets, they're going to stay in order. there are some folks who might be kind of thinking about end times or an apocalyptic type of situation that say, well, I want to own some gold. Well, if you want to do that, then don't own it via a mutual fund or ETF because you're presuming that, again, public markets are going to stay in order. So that is one way that you could express that within, say, an IRA or a Roth IRA or some other kind of account. You could own gold kind of in that context. Other clients, they want it as a tangible asset. They want to be able to hold gold. So how can you own gold physically? Well, you can own gold coins. Oftentimes you would pay for these. You'd make a payment and you'd receive them in the mail. You could pay for gold bars. I think Costco, here recently has been selling gold bars, of various sizes. You can own gold rounds. Now, if you own gold, the physical, tangible gold that you hold, you have to store it somewhere, and it needs to be secure. So there are a variety of different ways that you can kind of think about this. Before you even get there, what you need to do is buy from a reputable dealer, because you really don't want to buy from an institution that might be fly by night. It's very hard for a person to be able to verify, well, what's the quality of this gold here? So, and there's usually a transaction cost there. So larger institutions that have good names, they're going to typically have a smaller transaction price, and they're also going to typically be easier to verify. But there's still a cost, to verifying that you have a certain amount of gold and to buying and selling and those kinds of things. So you need to understand the pricing, understand, how you're going to secure these things, and then how you're going to store the gold. I mean, are you going to put it in a safe at home? Are you going to take it to the bank and put it in a safe deposit box? Are you going to hold it somewhere else? All kinds of different questions that you really need to think through, and you need to have someone, one person at least, that you trust that knows where that gold is. And preferably, it's not somebody that you're traveling with constantly like your spouse. Because, if you have $100,000 worth of gold under the front porch and only you and your spouse know about it, and heaven forbid something happens to you, then your kids, your grandkids, your heirs may have no idea about that, and that may be found 100 years from now, by the fourth owners of your home from now on. So you really need to have thought through what's your plan in terms of who knows about the gold and where it is. Particularly if you put it somewhere that might be a little unusual outside of, say, the storage of a safe deposit box that your heirs know about, or the safe that you know about, that your heirs know about. Now, the problem here still is, if you have it in a safe, are you increasing the potential that you get robbed? Because, again, you need to make sure that there aren't that many people that know what you have. And, with the number of institutions that are being hacked these days, my own personal question would be, is any institution secure enough where they can say without a doubt, you can say without a doubt, nobody's ever going to know that I bought gold from this institution? Because if someone finds out that you bought $50,000 of physical gold, you may become a little bit of a target there, via robbery and those kinds of things. So I think those are things that are difficult to be able to kind of grapple with and know, with certainty, whether that might create some kind of risk there. But if you hold the gold physically, I think you need to have a plan at a minimum.
Well, and then the plan needs to include, how do you actually sell the gold? Because it may be really easy to go to your local Costco and buy a little gold coin or a little gold bar. But how are you going to sell it? You've got to find somebody that will purchase that gold. Maybe you can sell it to a friend. But if you're going to sell it to a dealer, maybe the gold spot price is $1,000 an ounce. Well, that dealer's going to take a cut. So let's say you bought it at $1,000. Well, you may only be able to sell it for $900 because the dealer is going to want to take some sort of a cut to initiate that transaction. And so the reality is, you have to know this going in. You have to know that, it might be easy to buy. It might have a store of value, but it might be really hard to sell.
There are institutions that they focus on this, that are precious metals depository gold storage types of institutions, where you can put the gold there, they're going to have all kinds of different procedures and processes to make sure that they're safe. You can either have a segregated account or a segregated storage where it's only your gold in that particular area, or you can have an unsegregated area, again, that's going to be maybe a little bit less expensive for a broader group of people, and it's going to be together. But at any rate, there's going to be, again, processes, procedures to be able to keep that safe. Oftentimes the insurance component is already built into the cost, and that tends to cost somewhere between 0.5% and 1% on an annual basis. Again, but this is for folks that tend to have a lot of money that they put towards this type of storage. And there's a drag to that. I mean, we talk about how even if it's 0.5% to 1% on an annual basis, just to make sure that your gold is safe, you have to factor that in as well with the transaction price on the front end, and the transaction price on the back end, and what the dealer is taking in terms of cuts. And at the end of the day, it's not an inexpensive investment.
Yeah. So hopefully we've explored for you a little bit of the complexity that surrounds gold. Clients, if you have questions about investing in gold or other precious metals, we would love to have a conversation with you about it. Until next time, take care.
If you like these financial planning videos, please share it with a friend, and if you have questions, go to our website at SiriusRetirement.com. This content was provided by Retirement Planning Services. We are located in Knoxville, Tennessee. You can visit our website at SiriusRetirement.com. The information in this recording is intended for general educational and informational purposes only, and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult with your professional advisor before taking any action based on its contents. Advisory services offered through Retirement Planning Services, LLC.